Hi traders, this is Dr. Barry Burns from Top Dog Trading. I get a lot of visitors to my blog asking me the same question, and that question is very simply this: Barry, how do you trade breakouts? They seem to have a lot of trouble trading breakouts. And one of the most common questions that I get is, how do I avoid false breakouts where it looks like, oh, this thing's breaking out, I buy it, and then it goes right back into the trading range? Very common situation. I understand that question very well because I also have been very frustrated by that. I took a course, gosh, I've taken so many courses, but there was one guy that I took a course from, and he just loved breakouts. In fact, that was his whole methodology, revolved around these breakouts of significant levels. And I took several courses from him, pretty much all the way up through all the advanced courses he offered, and finally decided, I don't think breakouts are for me. So, I could look at that and say, well, I wasted a lot of money, but actually there was a lot of other things that he taught which were extremely valuable as well. And then also, though, perhaps the most important thing that I got from that was I developed my own approach to breakout trading that works better for me. So I'm going to share that with you a little bit, just briefly here. I can't go into all the details simply because in a publicly shared video like this, we just don't have the time allotment with the bandwidth limitations. But I'll give you the idea, and you can experiment with this yourself. And all I can tell you is, for me, this has worked phenomenally well. And I think it will for you too if you apply normal discipline and money management, which is really what it's all about, of course, anyway. So let's go ahead and take a look at it. Again, don't worry about what market this is. I get asked that question a lot. Well, what market is that? And what time frame? It doesn't matter. This works with any market that's a liquid market. Time frame doesn't really matter. I use this for day trading, swing trading. Again, it's a universal, very robust technique, technical analysis technique. You can use this with Forex, futures, stocks, intraday charts, daily charts, monthly charts. It's just a mathematical approach to trading any of these markets. Okay, so having said all of that, let's get right into it. So here is a common trading range. Okay, so it's just a channel, basically called a channel. And we've come down here and we've tested this channel 3 times on the bottom and 3 times on the top. So this is normally a very good time to start looking for the market to break out of a trading range. After the market's tested the highs and the lows 2 or 3 times, generally the math is starting to take the odds of it's not going to hold this trading range for much longer. But here's what I do. Here's a typical scenario. Okay, people will look at something like this and they'll say either, okay, it broke this high, or they'll wait for it to close the high and then they'll take the next bar that closes above the high of the bar that broke this level, and they're getting in, somewhere in here and buying this. For me, that has been disastrous, just disastrous. And I cannot tell you how to trade that effectively because I've never been able to do it. I just don't like that method of trading. What I do actually is to trade a breakout. If I want to buy the breakout of this high, what I'll do is I'll buy this low. Now, we've got a nice, this is a stochastic down here. We've got a nice stochastic pattern. We've got this support here that we've already established with 2 prior lows. We've got a nice 2-bar candlestick pattern, reversal pattern here. So what I'm going to do is I'm going to say, yeah, I want to be long this breakout, but I'm going to buy down here. And this fits perfectly with the well-known adage, buy low, sell high. So if you buy here, you're buying high. You don't want to buy high, you want to buy low. So we're going to get in here. Now you might say, oh, but Barry, what if it doesn't break this high? Doesn't matter, because what I'm going to do is employ money management techniques, and when it gets up here in this range, I'm going to go ahead and just sell half my position. And again, you can use whatever fraction of your position you want to, but it is very important to go ahead and to just sell part of your position as you get into this obvious resistance level. And therefore you lighten the load. Now if this thing comes back down and the range continues, you're not going to lose money. Of course, you'll also have another trailing stop put in here, so you'll be out before this gets down here. But the point is, I'm in early. I'm in before the breakout trader. So if this thing fails, first of all, if it succeeds, I'm in before everybody else. If it fails, I still don't get hurt. And that's the beauty of it. Now, how do you know to buy this low? Well, again, you've got to use, again, this is where I can't go into all the details, but candlestick pattern. First of all, you're going to buy off the support if you get a good indicator pattern here, you get a good candlestick pattern here, and you're going to want to look at the next higher time frame. And I like to use 3 times the time frame and see if the energy, what I call the energy, is up when I'm buying this. If it's in line with the next higher time frame, then I'll go ahead and buy this. If it's not, I'll pass on that long. Okay, so just for giggles, let's see what happened here. Boom, 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 right back down. And then another lower low, and oh my goodness, went all the way back down in. So here is a breakout trade that did not succeed. But again, if you took my entry, you would have actually made some money. Whereas if you took this one, it looked really good. And this is the other thing. These breakout trades, just because you broke out of a range, and again, this is a little bit of a significant breakout. Not all of them are this generous. Sometimes they just go like this and come right back in, right? They just break these highs just by the time you get in by, a tick or a penny or something, and then they come right back in. This one actually went up a little bit further and came back down. Just because you do clear the previous high and the previous range is no guarantee that the market's going to start trending up and go to the moon. In fact, I have found more often than not, it doesn't do that. It comes right back down. These patterns get very, very messy. And trying to find a long-term position on this stuff, it normally just doesn't work. But again, by getting in down here, at least I'm making some money. And if the thing does go to the moon, okay, I'm on the spaceship for the ride. Let me show you one more quick example. Okay, so now in this example, we have again a range-bound market, but the previous one was a sideways channel, and that's how most people think of the type of pattern that they're going to be trading a breakout. But this one is a symmetrical triangle. So here again, what you want to wait for is you want to wait for at least 2 confirmations. So here we have really 3 on the bottom and 2 on the top. Now that we have that, we have a confirmed triangle, because before we even take a trade, those are all in place. In other words, would I go short here? Well, that's a very risky proposition. You could, but at this point, if you are actually shorting there, you do not have a confirmed triangle, because this high is not confirmed. You're shorting this high before it's actually clearly confirmed high, so you only have 1 high. After that high is put in, and then you get your next low, now that's a confirmed high, and so you have a confirmed triangle. Okay, so we have lower highs, higher lows. Here we have, again, 3 higher lows. Now we come to this spot right here. We come right back to this triangle trend line on the bottom. Now we can buy here. Why wait till you get here? Why buy this breakout when you can buy off of this support? Buy low, don't buy high. Then, when everybody else is getting in, see, I've already been in since here. And we're going to lock in some profits at this high here. That's kind of extreme. I usually do it around the real bodies here. And lock in profits. That's a very good target level right there. And then if it continues to go higher, that's beautiful. But the main thing is we want to be in before the masses. The masses come in on the breakout. We get in before the breakout. And when they buy, This is the beauty. When they buy, what they're doing is that buying pressure is continuing to move the market up after we're already in. So that's my technique for buying breakouts. Obviously the same thing works in exactly the opposite way for taking shorts.